Let's bring in David Hardin. He is the CEO and Chief Investment Officer at Summit Global Investments. David, it's good to have you here today. Where do you think people should be putting money to work right now?
That's a great question, Kelly. Thank you for having me again. I appreciate being on your show. It's an honor. You know, I think they need to be very careful with where they put their money. And I think that all these different signs and mixed signals and war and inflation and the Fed speak that's going on, it's telling us that we have to be more risk managers with our assets. And when you're a risk manager, you take a look at what's the downside risk in your portfolio. So I think you need to think a little bit more defensive rather than on the offense right now. Even though there's signs that maybe we're coming out of this, I don't think it's all flushed out. So I think there's still possibilities of some more downside, and I think you have to be a little bit more cautiously optimistic here. It's great that the Fed has told us now what they're doing, and now we have the rate increase behind us, but inflation is still there. How good is this going to happen? There's still definitely uncertainty in the markets. So it's not clear skies ahead. We can't just put the pedal to the metal and move forward. We have to be more cautious and be very specific how we invest right now.
Yeah, a couple of the names. I mean, do you feel comfortable with Chevron? Okay, let me put it this way. They're consensus right now. You stick with energy. You've got defense here, Lockheed Martin. A lot of people are looking for kind of some stability as the rest of the market has been chopping around. But, you know, are these kind of all too consensus? We've already seen the whipsaw moves in energy over the past week. You see how defense could be next, depending on the situation with Ukraine and how that evolves. So, you know, why these names as a buy here?
I think this, when you think about defense, you think typically like staples or consumer staples and healthcare. I think those are still at play, but you have to include some value over growth. And when you look at value, I know energy is a little bit volatile, but you have to look at value and some financials in there. And so Chevron, to me, with a PE of 13, a yield of about 3.6%, gas prices, yeah, they're volatile, but they remain elevated. And so also Chevron's doing some things that have nothing to do with Russia's war with Ukraine or other things with their announcement to acquire renewable energy group. They're looking at lower carbon emissions. That's a lot of ESG talk right there. But the point being is that there's more to Chevron than just gas prices. As long as they stay elevated, which I think most people agree, I think Chevron's a place where you need to have some money.
You also like McKesson. You say keep avoiding a name like Zoom Video. I mean, where do you think rates are headed? Do you think people can be comfortable owning stocks here?
I think you have to look at stocks a little bit longer term than just tomorrow, right? Day traders are out there, I'm sure, but most investors are not day traders, right? They're investors that are looking for help for their retirement. So from an average investor, now's the time to make your 2021 IRA contributions. Now's the time to maybe make your 2022 contributions, right? It's the time to ask your employer to make their match. This is the time because, yes, we maybe haven't hit bottom. Yes, we're going to have some volatility. But having equity exposure is really where the bulk of assets probably still need to be.
All right. And so maybe a couple of tactical moves as well for people who are reeling from this environment. David, it's good to have you on today. Thanks for your thoughts. We appreciate it.